Hello guys and welcome to this video. Today we're going to be talking about the head and shoulders pattern, which is commonly used within trading.
The head and shoulders pattern is used to determine when the trend is reversing and the market structure has shifted in the opposite direction.
We're going to show you what the pattern looks like first and then show you what it looks like in the market.
So let's get into it. Cool, so to start with, we're going to talk about the structure of the head and shoulders pattern, mainly focusing on the highs and lows, and then being able to determine when the structure has changed, so then we can start to look for our opposite positions. So to start with, we're going to talk about an uptrend, so we're going to talk about the normal head and shoulders pattern. So when the market is moving, we can see that it's moving uptrend because it's making impulses, followed by corrections, followed by impulses, and then corrections. And then when we can start to determine when the structure has begun to shift is when we don't form similar corrections, but we form something a lot bigger, like so. However, when the market has done this, we're still actually uptrending because we failed to break this low point here. So the market is actually still uptrending. So that's just our initial signs that the trend is reversing. Then what we look to see after that is we then look to see a smaller impulse. So what we had to start with was a bigger correction. Now what we're seeing is a smaller impulse, something like this. So this is our second sign that the trend is reversing, because as you can see, the impulses here were a lot bigger and the corrections were a lot smaller, but now we've had a much bigger correction followed by a much smaller impulse. So we can start to say that this is potentially the impulse and this is potentially the correction. However, like I just said, this is still uptrending because we have failed to break this low point. So we can start to draw in a potential zone across here, something as such. And then so we've had this correction now, and then this is where we actually get our structure shift, is when we actually break this support level in the market, and this is our actual structure shift. So now we've actually broken bullish market structure because we've actually broken the higher lows of the market. So then we can start to draw in a zone up here because this is now our shoulders. So we've got our left shoulder on this side, we've got our head, and then we've got our right shoulder on this side. And then we've got our neckline here. And then when we're in a head and shoulders pattern, what we look for is a retest of the neckline to then look for the continuation. So all the retest of the neckline is just when it forms a lower high in the market. And then where we actually look to enter our positions is on a structure shift, a momentum shift at this level, just as evidence that this is actually making a lower high in the market. And then we look to trade, and then we look to catch the impulse away from there. So that's the normal head and shoulders pattern. Now let's talk about the inverse head and shoulders pattern, which is just the opposite. So with the inverse head and shoulders pattern, the market is downtrending, forming impulse, correction, impulse, correction, and then we've got another impulse. So then when we start to see the initial evidence that the structure is changing, we get a much bigger correction, which is still in a downtrend because we haven't actually broken this lower high in the market here. If I just highlight this, something like that. And then what we actually get again is we get a much shorter impulse, something like this. So initially we had impulse correction. Notice how big the impulses are, and notice how small the corrections are. But this time we've had a much bigger correction followed by a much smaller impulse. So this is our initial signs of the trend reversing, turning from bearish to bullish. So then what we actually have again is our zone across here, acting now as a resistance in the market. And then we get a break of resistance, which is this is our structure shift, where the market has actually shifted into bullish market structure. So this is our evidence. And then when we're actually looking for our position, is we're looking for the market to pull back, to retest this resistance as support, creating a higher low in the market. And that's when we're looking to take our position to the upside. So this is where we are looking to enter the market. Another thing you can look at is using trend lines for this as well. They're not always going to be exact, but you can just kind of use it to understand the structure in the market. So for this downtrend, we can draw a kind of downtrend here, and it just goes to show that we have actually broken this downtrend. So this is our initial sign but like I said earlier, this could just still continue in the downwards direction. So we wait for that extra evidence, a break of the neckline of the head and shoulders pattern. This time it's inverse head and shoulders. So we wait for the evidence, we wait for a break above, giving us our evidence, and then we wait for the pullback, and then we look to enter. Similarly, on the uptrend, over on this side, we have our impulse, we have our upside movement here, and then we can see the evidence that the uptrend has been broken and the market structure has shifted. So yeah, that's basically the structure of the head and shoulders pattern. And now Ryan's just going to talk about an example within the market.
Right, guys, so this is Euro CAD of a past experience where head and shoulders pattern played out to perfection. So just looking at the 4-hour chart now, we can see we got our ceiling here, our top resistance at 1.6 near enough, and then we also got a floor down here. But as you can see, price has been impulsing all the way back up to this resistance. If I scroll in a bit further, we can see price has been impulsing, correction, impulse, correction, and impulsing up towards this resistance level. So at this level in the market, we can start to predict that the price might reverse in the market. So I can see, boom. So like Ant was saying, we had impulse, correction, impulse, correction, impulse. We then had a bigger correction and a smaller impulse here, as shown. So now we can start to map out that there could be a potential head and shoulders pattern playing out. So skipping further along, see how we now the structure shift where we now had this big impulse, correction, now followed by another impulse. So now we can start to map out a potential head and shoulders pattern. If I can use the trend line to draw in our neckline, as you can see, is a bit tilted. Not all head and shoulders pattern are perfect. They're not exactly what it looks like on pen and paper. So you need to adapt sometimes, and this is a perfect example of this happening. So you can see here we had our left shoulder, this is now our head, and this is our right shoulder. And we have now broken impulsively to the downside, breaking the neckline. So what we're waiting for, we're waiting for a pullback to retest our neckline. Skipping forward, boom. Here we go. It looked a little longer, but there, boom. That was the retest of our neckline. However, we are still in bullish market structure. So what do we need to wait for? We need to wait for this to be broken. If I can draw this corrective up and something like that. If I copy and paste that, we can see we are in this type of channel, correctively pulling back up to retest the neckline. Skipping forward again, boom. A bearish engulfing candle breaking corrective structure. So what do? We enter on the bearish engulfing, stop loss just above the structure here. We should be more than safe here. And our target is 1.55. As you can see in the market across here, it's had a nice level where it's rejected it here and price was moving around it. And then we actually came back, retested it, and then impulse to the upside. So this will be our target here. And as you can see, it's just about a 1 to 3, which is fine. That's what we target for. So probably make a stop loss a bit higher. Boom, perfect. And what do? Just let it play out. You see price moves to our direction and boom, hit our take profit. Perfectly a 1 to 3, a perfect risk to reward, all you need. And that's how you trade a head and shoulders pattern.
You to determine when the trend.
Bob, you're the worst. No, you actually are the worst,
It's
bro.
because Joe White, like I can read your mind.
How can you read?
I can read your mind, bro.
Don't read my mind, bro. Stop reading my mind.
Cool. Go.